The inflation forecast has been revised upwards. Something that was coming down, we are saying it has started going up again. And at this point of time, crude, which is one of the biggest factor that leads to inflation, that is perhaps at the lowest level of last several years. What if crude goes up? The GDP growth also, the forecast has been revised lower. The writing was on the wall, the spending was not there from the government side. The recessionary conditions are visible on large sectors. In any case, robots at the pace at which they are replacing humans, humans will not earn money. What will poor GDP do? The third one, demat opening is at 7-month low. This frenzy had to end. In fact, a lot of companies may go for M&A soon, and this number will continue to go downward only. The fourth one, the CRR has been cut, but the interest rates have been left unchanged. This is a delicate situation in which neither bears nor bulls are happy or unhappy. Both of them at the end of the day or end of the week were left confused, and that reflected in the market sentiment today. Despite the Sensex expiry, there were hardly any volumes around. And the spike was there, but there was no big calamity. And today, IT index was red. No such problems for next 50. Not a single red in last 2 weeks. And besides next 50 and ITC a little, not much to cheer about or in the green in this entire graph. Look at the volume picture which I was talking about. These are the biggest stocks in Nifty. And Reliance, which was back in white yesterday, that returned to red. In the Nugget section today, we'll try and understand the impact of CRR and especially which banks are more investable right now. I'll talk about my perspective. You can use that knowledge to decide for your own. This is not an investment advice, of course. Tata Motors, Titan, Tata Steel, Trent, Tata Consumer, a whole bunch of Tata companies in the Nifty 50, they were in the green, but the number of reds was way higher today. Also, the pull from Reliance Industries, Airtel, that was way bigger than the push given by Tata Motors and Bajaj Auto. Today, auto was rocking. See here, Tata Motors, Bajaj Auto, Maruti. Yesterday, this entire pack was at the top. Today, the entire pack number 1 to number 6, that was pulling Nifty down. Total reversal from yesterday. Today, the top slot was reserved for Vedanta and the gains were good, 6%, and IRFC shot up 4.75%. In fact, the entire NBFC finance pack was doing good. See REC here. And Indigo had a green day as well at the top along with NHPC. Now Nifty will be red only when you see 3 of the large sectors at the bottom. Today, surprisingly, automobile was the biggest green tower. After that, no large sector for a large distance. Overall, 21 sectors were up, but the market cap is here on the negative side. That is why Nifty was not green. And look, there's not a single sector providing negative returns right now in the last 2 weeks since 22nd November. And data can be really cruel. As soon as the last few entries of red were trimmed off, diversified industrial has jumped to number 2. That is because of the recovery this stock has seen in the last week or so. This is despite a red day today. Yesterday it was at -2 or -3. Today Nifty and Bank Nifty spent significant time above the line. However, the trend was lower. Next 50, however, was up whole day and IT was down whole day. And normalcy returned today in terms of trading range for Nifty, 0.5%, less than that actually. Bank Nifty still was volatile, 1.25%. That too is primarily this spike. Took Bank Nifty from middle of the day to bottom of the day and to the top of the day within about 5-7 minutes time. Yesterday in Bank Nifty, the bigger banks were up, the smaller ones were down. Today it was the reverse. Private sector banks were mixed bag today. Overall, the bunch was down 0.2%. The volumes of the smaller banks were good. People were a lot confused. What to do with the MPC judgment? No such confusion for the public sector banks. Clearly, they will have more money in their hands and they were all struggling to raise money via CASA. The entire pack was rocking with high volumes and most players were up only 0.2% for the sector. In the investment pack, BSC, CDSL, and MCX made fresh highs. However, CAMS, which was the hero of yesterday, that corrected. Overall, the sector continues to look good. 1.4% total gains for the entire sector. Hardly any distances to 52-week high. People were not sure how to handle Bajaj Finance, Shriram Finance, etc. today, but the lower tier public sector NBFCs, they were all looking good. PFC, REC, IRFC. IT sector today was a bit undecided. No such indecision for Policy Bazaar, but there were greens today also, and there were all-time highs made. The gains, however, were on lower volumes. Telecom finds one player every day who's up 10-15%. Earlier it was Nelco. Today it was the turn of ITI. In the auto pack today, Hyundai and Ola were down a bit, but good gains in the entire pack. Otherwise, Tata Motors up 3%, Bajaj Auto came back today 2%. Even the big boy Maruti 1.2% sounds like a small number, but that's a really large company. Defense, most players started well, but then they cooled down towards the end of the day. GRSE, Zen Technologies, Mazgaon Dock, BL, HL. Zen Technologies made a new high today. Metals, nothing to complain today. In fact, Vedanta was up 6%. Even Hindustan Zinc seems to be showing positive signs. In the power pack, the ancillaries are looking better than the power generators. Renewable energy was looking good today also. Borosil Renewables, that has been up. See last 4 days. And good gains. Vari Energy was up today also, not as much as yesterday, but 2.2% takes it closer to the all-time highs. That number is 3600. Consumption sector was looking okay today on the greener side. Associated alcohol, and I bought that stock yesterday, that was up 7.4%. Varun Beverages up 1.5%. Non-consumption also, the bottom tier was looking better today. PN Gadgil up 5%. Buying is returning to Titan as well as Trent. Only Asian Paints and DMart are the remaining red stocks in this sector. Tata Group is usually a lot green these days. The biggest gain today was Tata Motors 3.1%, and Adani Pack is back to reds. All companies except Adani Wilmar in the red today. Now here's a preview of something I'm building right now. This is a global view. Look at the greenery across the world. Only Brent is red. We know that crude has been down. S&P 500, Dow, Nasdaq, Russell 2000, FTSE, DAX, Nikkei, the Indian indices, the four which I track, USD versus INR, this actually should be red. Gold on COMEX, silver, Infosys ADR, Wipro ADR. And four of them made new all-time highs in the last 24 hours. This macro data at times can help take bigger decisions and improve the quality of decisions, which is the objective of this channel. Now there is a bit of influence of crypto on the word today. Bitcoin 98,000, ETH, USDT, Solana, Doge, and XRP, the popular coins right now. The outcome was not very good today, not many greens around. FIIs are back to red. Only sectors which were up, Next 50 and auto. Look at the phenomenal trend of Next 50. This is the mid caps typically. LG Electronics is coming up with a IPO, a large one, and C8 has acquired a large tire company from Michelin. Most of the Nifty was red. Gold 76,600, silver 92,700. In fact, silver ETFs are not reflecting the rise in silver value for some reason. I think the silver ETFs will catch up in the next 2 days. And Bitcoin had a crazy day. It crashed nearly 9-10% in a matter of minutes because of profit booking from a large holder. So it is not just India which sees these spikes. And we're talking about an asset of $2 trillion size. I bought IRFC, trading reason. The trend is looking good and you may laugh over it, but yesterday I sold South Indian Bank. Today I bought it at a higher price. The trend is looking good. And there's something silly I did. I was trying to book profits from Motilal Oswal, the top 100 fund. I wanted to sell 20,000 because that was the profit in my 5 lakh investment, 5 units. And instead of selling 20,000, I sold 2 lakh. I have transferred 20, like I mentioned yesterday, to a new fund. This is again a Motilal fund, Motilal 50, which is basically Nifty. The idea is to move the profits booked from other trades to this particular account. Overall, an investment day and a green day. The week ends well. Today's nugget, let's try and understand the fine print of MPC policy, specifically from retail perspective. The CRR was 4.5%. It has been cut by 0.5%, but this 0.5% is not in one go. This in two parts, 0.25%, 0.25%. Now suppose HDFC Bank or any other bank takes 1 lakh rupees from you or me as a deposit. So, as per the rules, to ensure there is enough liquidity in the system, the CRR equivalent they are supposed to keep as a reserve and not lend it out. When CRR is 4.5%, they can lend out only 95.5 thousand to external people as a loan. Rest is kept in case a lot of people come for redemption asking for their money back. So RBI uses this particular percentage to decide how much liquidity is required in the system. If things are getting out of control, they increase this ratio, which means banks have to maintain more cash with them and they can lend less. That is used to control inflation to a very large extent and liquidity, which in some ways leads to inflation. So when this particular value goes down from 4.5 to 4, banks will have higher money in their hand. What does that mean? So if banks are struggling for reserves, CASA for example, if they are finding it hard to raise money from public like you and me, saving bank, FDs, current accounts, then they will have slightly more money right now in the hands. As per RBI data, this number is somewhere around 1.15 lakh crores. Not a small number, but again, not a very big number either. Still provides some immediate relief to banks who are struggling to raise CASA. Also, this money typically lies idle or goes to RBI via reverse repo rate. This is not used for lending, like I said. So, as a result, there will be money made on the remaining 0.5%, which is freed up now. So, this adds a little bit of profitability to the bank side if they are customers to take that amount as a loan. Will this mean interest rates will reduce? Not directly, not immediately. This is not related to interest rates right now at all. Interest rates are totally different. They depend on something called repo rate to a large extent. Repo rate is the rate at which RBI lends money to banks when they require it. There is something called reverse repo also. If RBI borrows money from banks for whatever reason, liquidity or any other reason, then RBI uses reverse repo rate. Typically, banks try to raise money at a rate lesser than repo rate. RBI charges slightly higher only. So that is basically the balance that banks need to strike between repo rate and the market rates, which is CASA, FD, saving account. You might have seen higher quality banks like say HDFC. They give 0.25, 0.5% less for the same tenure, but second tier, third tier banks that are not very popular, considered risky. Just for example, like I'm saying, suppose Yes Bank you consider risky, they'll have to give higher interest rate than HDFC. And HDFC will charge lesser than what they have to pay to RBI as repo rate. This is a very fine balance that decides the fortunes of the bank. That is why you will see the OPM very different for different banks. In fact, the smaller banks find it very hard to manage margins. As a result, you will always see their P is smaller or lower than larger banks. You will always find ICICI Bank, HDFC Bank lot more expensive in terms of P. So now when will interest rates change? Interest rates will change when RBI decides to tinker the repo rate, not before that. Banks are free to change their own interest rates if they can. But banks are already aware that at a lower interest rates, lot of customers will not go for FDs. This is the problem equity and bonds have created for the banks. In mature markets, there is a concept called securitization, especially where mortgages, your home loan papers are used as collateral to create bonds out of them, and that is used to raise money. India, it is there, but not very mature market, especially retail does not participate in securitization too much. If RBI can expedite that, then that will improve the life of banks because that interest rate will be higher than FD, lesser than probably the bond rates. Now, which sectors will benefit more from the step taken today? Typically, the sectors which lend money related to, say, real estate, automobile, and borrowed consumption, which means basically you go to, say, a Bajaj Finance, buy a TV on EMIs. These sectors is where the demand was getting compressed and they were feeling the heat already. All three of them are a beneficiary. Take it with a pinch of salt. This consumption happens if people are emotionally secure. So, job and money, two ingredients are required along with a fundamentally favorable interest rate situation. Otherwise, you can tinker with these rates. If people don't have jobs, if their job has been taken by a bot will not go and buy an automobile, for example. Now, which banks will benefit more? Like I said, there are some banks for which CASA is easier. For example, HDFC, ICICI, SBI. Most people prefer to keep their money safe. That is why they choose the safer banks or the larger banks. These banks will also benefit, but benefit lesser because their interest rates are already lower. The next tier of banks, like say Bank of India, Bank of Baroda, the popular ones, but not the first tier ones, they will benefit more than the first tier banks. And then there will be a third tier banks. These banks are not very popular. Banks that are considered a little unsafe. These could be regional banks, cooperative banks. Cooperative banks actually will come at number 4. So number 3 and 4 will benefit more in terms of their profitability improving. Now, trading wise, nearly everything will go up. They have already gone up in anticipation of all this. But again, these banks in this tier, their profitability will increase slightly more compared to the top tier. This is on a relative basis. These banks, it's not that they will not benefit. Hope this analysis was useful. Thanks for watching, and I'll see you next week.